Great. And then, okay, cool. Hey, Dan. All right. Welcome, everybody. Today is June 9th, 2025, and we are in the last quarter of Q2. So it's we got through the first week. It is the 9th. We usually see price a bit differently, so we'll talk about that and how that kind of correlates. Let me see. Oh, awesome. And then Dan, can you confirm with me? You can hear me on YouTube, right? I believe it's up. Yeah, I think we're good to go. Yeah. So for those that are kind of new, I see at least one new face, but we take a top-down approach to markets, and we talk about predominantly Bitcoin and Ethereum markets, as we are fairly active in those markets. But we also talk about broader macro, all those kind of things in the weekly stream here with Bookmap, right? And so our major, awesome. Yeah, so our major focus is on fact-based trading solutions, right? So what's happening here and now, and then somewhat taking the emotion out of it. And I know it's a lot easier said than done, especially if you are selling volatility, right? And so without further ado, let me introduce myself. My name is Spencer Regal. I am the Chief Crypto Options Trader and Strategist at DARMA Capital Trading. You can follow me at _RIEGLE or LinkedIn. Just my name, Spencer Regal. And we actively are pushing out content now, which is exciting. So you can follow us also on X, DARMA Cap Trading. And you can see some of the stuff that we're going to be rolling out. And then we also do have some blogs. So let's go through the disclosure first, and then we'll talk about some house cleaning and some cool things that are going on. So all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, right? And so every time that we kind of hop on, we like to talk about risk capital, right? And what do we see as risk capital? Risk capital is capital in which you're willing to lose, right? And so that means if you need that capital at the end of the month to pay a bill, if you need that capital at the end of the week to take your significant other out, or even just to go out with your friends, that's not risk capital, right? If it has a direct impact on both your psyche, but also your life, then it's better used to make yourself happy or in your day-to-day, right? And so what we see risk capital is capital in which you have that you're willing to lose and you're willing to take risk with it, right? Just super simple to the name. So that's kind of the disclosure, and let's talk a little bit about some house cleaning. Let me see. I'll drop this and pull this over. So let's bring that over. One thing that we like to talk about each week is our website. We just rolled it out this year, which is exciting. So we keep publishing new things on it, new blog posts, new deals, new everything in which we do, new everything about us, right? And so we are offering specifically a deal for Bookmap, so 50% discount on the PriceMap daily if you're here in the Discord, right? So feel free to reach out to me. We are working to grow the Discord here in Bookmap, and it makes engaging on a weekly basis, daily basis a lot more fun too, and we have a lot of people talking. So you can head over to dharmacapital.trade. You can see everything that we do, right, about us, kind of our thought processes, what we do, how we think about markets. We have Advisory, Analytics Academy, and then obviously the sign up, right? And so a couple cool things to take a note at is Trade Vision. And so we haven't published it to Twitter yet, but that's going to be coming here shortly. This is where we do some of our blog posts, right? And so there's another gentleman named John that hosts some of the streams in the past. He came out and he wrote a couple blogs recently. So today's blog was about the 30-year Treasury bond. Bond market has been incredibly active in the U.S. and has really driven a lot of these larger macro narratives, right? And so wanted to cover some of the bonds, especially in the dated bonds, some of those long duration bonds here in the U.S. to talk about some of those expectations and what to look for, right? Obviously, if rates go higher, especially in the U.S., that's not particularly good for kind of the credit rating and the thinking of kind of how the world generally thinks about the US, right? So take a look at that. The next piece here is we do a lot of free stuff as well, not just discounts. So make sure to hop over to the sign up page, do a free trader assessment and education. There's a lot of free education that we offer as well, and that you can kind of get started with. So there's also free trials, free across the board, right? So take a look at that and let us know kind of your thoughts. All right, so how we run the weekly streams is sometimes we keep them a little bit longer, but then other times we kind of keep them short and sweet, right? Weekly updates talking about kind of the larger picture macro of what we've seen over the last 7 days since the last time we've hopped on. And then we take a little bit more of a granular approach, right? So we're looking at a weekly outlook, some of our proprietary data and analytics, and then we also pair it with Bookmap, right? And look on a micro level. Where's that liquidity resting in the book? And all those kind of things. Next piece is strategy, right? And so strategy is where we take that weekly price map outlook, that macro kind of outlook, and then we apply it to thinking and then strategy for the week, right? So let's talk about macro. For those that are kind of not watching the news every day, and the news can be a lot of noise, right? So there's one thing to note, but there's been a lot of damage control that really needs to take place out of the White House, right? And so, I don't know, just you can pull up any news outlet, Elon versus Trump, kind of what's been going on, the allegations, all these kind of things, right? And so what does that mean? One is initially the market sold off on the concern about that volatility, what is the stance, and then immediately priced right back. At the present moment, it seems as if a non-event, right? Something to continue to watch in terms of risk. And that left tail is basically that quick liquidation downside in price that we typically see. And so we say tails in option world. But is any escalation there, continued kind of deterioration in the trust and in the image of the White House is typically a problem, right? And so that's one thing to keep an eye on, that right now it's not being priced into the market externally, of the fact that bonds rates are up a little bit, and you're getting some of those inflows into Bitcoin, right? Another thing to think about is we are in the end of Q2, right? We are going into summer months, and so there are historical trends that do happen during the summer months. And a lot of the times people talk about kind of lower volatility. However, we are in a Trump administration, so that might be hopeful thinking, right? But one thing to think about is Bitcoin has caught the narrative and continues to be fairly correlated in some of its highest correlations to the bond market, right? And so rates, and that's kind of the reason that we published a rates outlook this morning. Rates are front and center in the market, and everybody's talking about them, and everybody's talking about kind of these alternative assets outside of just a dollar-based asset, right? That's kind of decoupled from this risk. And as far as I've been in crypto markets, right, which has been since 2017, so going on roughly 8 years, that narrative for the first time has been taking a lot of truth. And so I've always kind of negated it, but it's coming first and foremost and front and center for a lot of people, and it continues to correlate quite well with the rates. So take a look at those and some of that outlook. So that is kind of the macro view. Obviously, the next piece is this morning. There were news outlets that were talking about negotiations have started with China and the U.S. That is something that's kind of back of my mind, thinking about a right tail, right? So something that would kind of expedite this recovery in markets, since we've seen that large correction. The S&P 500, I'm taking a look at my screen on the left side here, is almost back to where we saw those declines at the beginning of the administration. and in markets broadly, and have made a drastic recovery, right? Bitcoin at an all-time high last month, and right back over 108.5 during the regular session today. So let's talk about kind of the weekly outlook and where we're at in terms of the price map and in Bookmap. But Enzo, I see your question. I'm going to answer questions at the end of the stream, just so that we can kind of get through the outlooks and talk about markets first, and then absolutely we can get into your question there. So let's go into Bitcoin first, because that has been the stronger of the two as of the start of this month. And then I'm going to pull up, so on the right side, and let me make sure that it's fitting correctly on, yeah, here we go. Zoom in there. Awesome. Cool. All right, so on the left side, for those that are unfamiliar, this is the price map. This is our proprietary data and analytics. So if you have questions there, reach out. But we always start the week at the directional, right? And not meaning price always starts at the directional, but our streams, we start at the directional. We see the directional to be the over-under sentiment bias price bias, right, is kind of how I like to describe it, so we don't get confused. Over it's positive, under it's negative, right? You can think of it as almost like a line in the sand. And then obviously there are some contextual understandings and some more than just that simple, right? So we started out the week priced over it, immediately we dropped under it, regained it, and it's just remained a bit choppy, right? The overnight last night, we made a play for under it, and we stalled right in front of the figure, right? And so I remember stepping off the desk last night around 11:30 here in Chicago, 10:30 here in Chicago, 11:30 in Eastern time, and we were basically right at the figure, right? And so if the market can't break under it, where's it going to go? Immediately, we see the market in terms of the major levels, which is APMDs, right? And those APMDs we see as average price map distance. That's somewhat of the underlying price map's beauty, is it projects out and kind of shows you that expectation of where price can go, right? So immediately, if we're over the previous week's close, where are we going to go? Test that previous week's high, and then take a stab at that major level, which we see at 109,422.5, right? The fact that we've done it all in one session, it's pretty positive, right? It's caught a lot of eyes to start the week. And to start the second week of the last quarter, right, or the last couple of weeks of the quarter. If the market is going to remain positive, it really needs to hold positive price structure. What do we mean there? So just outside of the price map, next is just thinking about higher highs, lower lows. Higher highs, lower lows. Higher lows, apologies. And so what is that? Really, we don't want to see a break under 107,600 again to kind of bring this momentum into question. And all that means from a pure technical perspective is just momentum, right? It's been a one-way trade. Doesn't mean it has to stop, right? And a break under the previous week's high is that signal that momentum, hey, could be stalling. And this is potentially all we're going to get for the week, right? But if we're going to continue to hold this positive price structure, in which we've had through this full session, this market can really take a stab, right, at that previous month's high and really go for that new all-time high at 113,168, right? So we think of it in almost a ladder, just to make it super simple as we kind of talk about things, right? One box to the next box, right? That's kind of our expectation. If you look over here on Bookmap, you can see that you have some resting liquidity right under that 109 figure, which is right in here, right? So this whole red box here would be a normal stopping point for momentum, right? But continue to lean on price structure. If price structure doesn't break, it is not a level to fade. It's actually a level to start looking for higher, and that 113 is that next psychological level, right? That all-time high, buy a little bit, right? You get all those buyers in over that all-time high, and you stuff them, right? That would be a normal expansion for the week, and that's something that we are looking at as price structure has not broken at all today. So let's talk about the other scenario. So the other scenario is if price structure breaks, right? The fact that where would that be? That would be under your previous week's high, right? So really under this 107, 106.9 area is where we're kind of monitoring for that signal for kind of this digestion. And if we can't hold under it, it's positive digestion. If we can hold under it, it's more digestion largely, and it's a cue to say that this is going to be a sloppy trading environment potentially for the remainder of the week, right? Where does that negative bias come back into play? If we price into here, and let's say, hey, we don't break price structure, we price all the way through here into this black area and immediately reverse, we see that as a UP reversal. UP reversal, right? Enzo, I see you have questions there. It's on the website, so we break it down in the academy. It's free. So go through that sign up process. It targets immediately the directional, right? For that quick expansion of range, failure, you get all the breakout buyers and then you trap them. Where are we going to go? The starting point psychologically, right? And that is your full round trip that on the UP reversal, right? Negative bias comes into play back over or back under 105.352. Where does it target? You have a lot of somewhat time frame structures down here to start looking at. And you also note that that lines up a lot with this resting liquidity down here in the book, right? There's a reason, right? Let's start pulling them up. So time frames are fun levels to look at because it's a reason for people to do something, right? Previous week's highs, previous week's close, previous month's close, previous month's mids, all of those levels, those are reasons for people to do something, whether that's delta hedge, whether that's take risk, whether that's to lighten up risk. Oftentimes you're going to see alignment in Bookmap with those levels, right? So down here specifically, we're seeing 104.500, right? All the way down here. You can see in front of that is resting liquidity, right? Which would be down in this area for a choppy trade again here. But all the way down, apologies. You're seeing more of that alignment here with this previous week's high. So that 106.800, you have some resting liquidity that's right under there, right? And so if that bid holds, immediately what we're looking for is that digestive positive outlook that we just talked about. But if we break through all of these, what I'm looking for down here is buyers to reload these liquidity bands, right? And so if they reload these liquidity bands, let's say they start stacking the way they are here, and they reset them down here, those are dip buyers stepping in, and that's supportive of a choppy environment, right? Where we see the best area for risk capital to be deployed this week is this green level. And we talk about the green level all the time. It's the R level, right? And so there's actual thinking behind it, and it's also on in the academy as well. But that's where we see the best risk reward. So the fact that it's under the directional is positive, right? Our sentiment bias is that the market is going to remain in a trend, right? And that trend is to hold positive as long as this level holds, right? So even under the directional, we're just looking for lower levels to buy. Why, right? Where is that lower level to buy? 102, right? 100. If 100 can't hold, then that's a problem, and we're stepping out of the way, right? Immediately we're stepping out of the way. We're not looking to buy until that level is reclaimed, and it needs to be reclaimed with power, right? And that power means, okay, let's run through a scenario. We break all the way down. These guys don't reload. And we break all the way down and we tag this 98. Reality is the simple fact that we're under 100, we're still not looking to buy. Why? Because that market is not perfect, right? And we oftentimes talk about perfect markets when we're on the stream because we're in the game of risk, right? And so why sit at the table and take a stab at something on something that's not perfect, right? So under 100, even if we rally from 98, and let's say we take a stab back at 100, if it rejects 100, we're looking to fade it. Why? We just broke this trend, and we have the potential to go into a hedge theme all the way down to last week's previous month's low. Volatility in Bitcoin has been getting crushed. We're looking at a 42 vol in terms of the 30-day. That left tail, if you take a look at it, it is not ready for volatility, right? Skews to the call side. That just means markets pricing risk to the upside in the calls versus the puts. So puts are generally cheaper right now. Why? Everybody wants the upside. We just hit an all-time high last month. We're back over 108.5. We're taking a stab at 109. Who knows where it's going to stop, right? Does it stop at 113? It's a good target level. It doesn't have to, right? This is Bitcoin again. So that's where that risk is being priced into the market. So any reason to look under 100 is concerning for the options market generally, as volatility is not pricing in a decline, right? And that's even on longer duration as well, right? So that's kind of the outlook for Bitcoin on the week and kind of how we see things. The biggest thing here and now is we made a monster rally to start the session today, start Monday. Is the momentum going to continue? Is it not? Logical level is 109.5 here, 109.422.5, right? There's an alignment here right under 109 in Bookmap for a seller. That has the potential to slow momentum into Tuesday, right? We have some larger macro kind of events this week in terms of economic numbers. Keep a lookout for those. But for here now, as long as price isn't breaking, there's no reason to fade it. Let's pull up Ethereum. Ethereum's a bit of a different animal. Part of the reason for it is we broke off the beginning of the month. And so specifically that was on the back of kind of that turmoil in Trump and Elon. And we really haven't recovered as much as Bitcoin has, right? Bitcoin broke down immediately the next session. By the morning, we recovered that full sell and we're priced right back. And we were priced right back, right? And then we've continued to rally and held that positive structure. Ethereum has been choppy and it's been difficult, right? For those that do trade Ethereum, you'll note that sometimes it takes the main stage, but oftentimes it doesn't. And it's kind of a product of liquidity. And that liquidity starts in Bitcoin and then it transitions into the altcoins. And you get that sloshing around, that rotation that you oftentimes see in the crypto market, right? And so a rising tide basically raises all ships is kind of how I think about that rotation. But for here and now, price structure hasn't been perfect in Ethereum, right? And so it's still positive. We started the week over the directional 252677. That's your over under. And that's kind of been that positive market structure to lean on for this session. But you'll notice that we're not up at the UP, right? And so the market really needs to base. Let's take, well, we can show the minor levels just to kind of take a look. 2618 is that natural stalling point for this really tight range, 2434.38 to 2618. That's a sell vol scenario, right? However, what needs to happen for this show to get on the road is a base over 2618 and a stab at 2709, right? We really need to take out last week's highs, just logically, to really take a stab higher. Once we do that, then sky is pretty much the limit, and that opens up the door to 2900, and then a what if all the way up to 31, basically, right? 3076. That is your what if high expansion range. However, because Ethereum has been slower, it would be normal that we don't really break out of this 2709 without continued follow through in Bitcoin, right? So those are things that we're watching to the upside. To the downside, let's talk about the downside, and let's also talk about the choppy trade, the messy trade, as Ethereum is coming off of a monster month last month and really is just continuing to digest in this larger range, right? It's positive. We haven't really broken down by any means. It's just digestive. And so for traders, that's really frustrating because initially you get this monster rally, you get call skew, you get all volatility, the term blows up, everybody's happy, right? The underline's exploding to the upside. And then through this process is psychologically torturous for a lot of people that are just trading purely perps, purely futures, and kind of Delta One products, right? Who makes their money in kind of these? One is if you're scalping the structure, which you absolutely can do, there's a lot of opportunity, right? Intra-week. Another is fading that volatility, right? So the volatility at these levels were much higher, obviously, than they are now. So we've seen fades in the vol, and we're actually, I think, 3 points under on the 30-day coming into this morning session. So last week was around a 72. We are around, I want to say, a 69. I saw a bit earlier. I'm pulling it up just to confirm. But I'll show it on the screen too, so that we can kind of talk about it here and now. So let's pull that up. So on this screen is DVol. So this is a Deribit's 30-day implied volatility future. Yeah, so you'll see vols faded, and we saw an uptick last week, 72 and some change. This was that massive extension, and since then we've just kind of been fading, right? So who's been making the money? People that are selling options right now, right? So let's talk about the downside in Ethereum, and let's also talk about the choppy trade. Ethereum under 25.26 once again kind of negates this expansion and really goes back into this digestive narrative. It doesn't mean it has to break. It hasn't broken, right? And it would be normal to have a really sloppy trade through here, right? So some strategies that actually work during that time is if we're over the directional, having a positive outlook with some short-term volatility being sold work well, right? So having some long deltas against some short calls, kind of in a covered call situation or a synthetic covered call, work in a good environment, right? Where do you get burned? Obviously, if we break out and you get that gamma squeeze, that's where you're going to get hurt. But it does allow for some digestive trading while still having that long delta approach to the markets, right? Bringing in that income in the form of premium sold while holding some underlying and just kind of waiting. So it also is kind of more of a risk adverse approach to just chopping around and punting some futures. So that's an option. But a break really under 24.34 is the signal for potentially this weakness to start picking up. That weakness then targets 23.41. Again, because this green level is under the directional, that's our sentiment bias, which means that we're looking to be buyers lower. It's where can we get them lower? 23.41.99 is a good figure to start looking. 22.50 is the best area for risk capital, right? And risk capital is deploying it at 22.50. And if we break under into this black area down here, again, just like we talked about with Bitcoin, that's a reason to be concerned. And that is not a market to be looking to be a buyer. We enter a hedge theme, and that hedge theme really has the door open up down lower, 21.58, 1974, right? So those are things to look at for Ethereum. Let's take a look at where that resting liquidity is. Noticeable liquidity is sitting here in the book at 23.50, right? Just under that previous week's low. And sorry, I'm getting a call right now, but just under that previous week's low. And then the resting liquidity we see here at 2,200, right? So right down there, just under this level, right? And so in leaning on both, again, if we do price down here and let's say that we hold, it's a market to be very cautious of, not looking to buy. If it can get back over that 2250 after breaking under, it really needs to make a positive stance, right, for that risk capital to be valuable. And so where is that? Again, 2280. We really need to, if we break under here, that level holds, and then we price right back under and we can hold 2280. That's the green light for potentially taking a restab up here. But if we can't, that is not a reason to look to take a trade. It's a reason to look to mitigate risk. So those are the weekly outlooks for Ethereum, and so we can open it up to questions. So let me make sure I'm reading off the question that Enzo that you pushed earlier. So it says, I have a question. When I'm trading BTC, I use Bookmap. There are two options, Perp and Spot. Both of them are plus or minus 50 in difference to the price on TradingView. Which is more reliable or better if there is one, Perp or Spot, than trading alongside TradingView? They're two different products. So one is a perpetual future, right? And so you can kind of look it up on just do a quick Google search or on what a perpetual future is, but basically that price is in the forward curve of the derivative, right? And so that's seen on a swap every day. That gets paid to the longs or shorts, depending on who wants to hold it. It's actually a really interesting product, and it's kind of how crypto is bootstrapped liquidity since 2016. So it originally was introduced to the market from Bitfinex, I believe. It was Arthur Hayes kind of brought it to fame. And so that is a super interesting product. What does it do? It aggregates liquidity. So instead of putting up $100 to buy Bitcoin, it actually provides leverage. And on some of these DEXs, Deribit, on some of the centralized exchanges, even on some of the institutional side, you can get a far more capitally efficient product, right? So instead of going one-to-one with your underlying cash, you can basically get margin. So 50 to 1, 20 to 1, 3 to 1, those kind of things. So it is a fairly cool product that doesn't exist for the most part to the retail space absolutely doesn't exist to the retail space in traditional equities. It is an exotic future in kind of the institutional space, but to my knowledge, it's not widely traded. So those are interesting things to think of. I think of I see the Perp market as being the most liquid. That's where a lot of your delta hedging is going to go off from your options. That's where a lot of your speculative flows are going to start hitting, and that's also where your liquidations are going to be, right? A lot of people have their cash on credit there. That's kind of essentially what margin is. So that's what I see as being kind of that market to follow. Spot market is always interesting just to see where those real cash buyers are, right? And those are people that are looking just to put up cash to buy the coin. Otherwise, it's a far better product to express a view in the derivatives landscape. So, and then, yeah, on your other question, what are the boxes? So the boxes, that's our proprietary data and analytics, right? And so that is PriceMap, and we talk about it each week a little bit. So you can head over here, go to sign up, DARMAcapital.trade/sign up, right? Go to register, do a free trader assessment, and education, go through here, the whole thing. And then it will get you access to the academy, right? In the academy, you will see everything. And these are all free courses that we offer. So we don't cover them a ton on the stream, but if you do have questions, make sure to go over there and then specifically go into the analytics insights, right? And so go through the critical range is a really good one. So you can go over here, you can click on this, and it'll show you kind of all the understandings and what we talk about and all of kind of the jargon that I talk about each week. But you can also go here to PriceMap, and you can go through all the understanding. So it breaks down each level, it breaks down what it means. A lot of times we get a lot of comments about what's the difference between just a general pivot? It's context. And so all these levels, instead of just basic pivot levels, they mean something, right? The R level changes. You can see how it changes every duration. And so we get new data that we update. All of that means something, right? And so you can see that the R being over the market, that's actually a negative sentiment bias, right? And so we're expecting levels to fade. And R at the directional, which is basically at the mid of the market, that's a market that's dangerous. It can make a positive move or a negative move. It's ready, it's coiled up, and it's ready to move. And so there's a ton of different stuff that you can go through and dive in, and it's all free. So take a look at that, and then you can also ask questions here in the Discord if you have any as well. Cool. Yeah, and then any other questions? Let me pull up the Discord chat and see. Cool. We'll give it a couple minutes. If there's no questions, that's okay. We'll hop off and let everybody enjoy their week. But I want to kind of go over when we're talking about the R level, and we're talking about that. I made a post in the Discord last week, so I kind of want to blow that up and show that. Let's do that. I don't know if I can scroll in. I don't believe I can. But basically, you'll see here. So last Friday, the market was pricing up, right? And we saw an expansion, directional held again, just like we talked about, and then it made a play for the R level. The expectation there was, because the R level was over the market, it was stationed at the UP, that's a good area to deploy risk capital for a fade, right? What happened, right? So kind of came in here early in the session and said 1:34 p.m. Focuses on 24.55 for the remainder of the session, with the R fade still intact, right? And that's basically, we made a play for 25.35, right? And that was the expectation for a fade. If the market is going to remain in a digestive stance on a daily, then it should fail here and it should continue to hold negative price structure, right? What does that mean? Immediately price up here, fade, right? We get to the previous day's mid, fade. And then the focus remained on 24.55.57. And you can see that there's basically 65 points down there for a quick scalp. And we can actually take a look at how it played out for the remainder of the session. So here is the dailies, and I'll pull up kind of to go through. And let's go through and do per period, and then we'll scroll back. So this is all of the price maps over the last periods. The one that actually matters is the 2 days, right? So we can actually talk about this, which is, I think it's super great when you're thinking about PriceMap and how to use it and utilize it in your trading. So let's take a look here. Here we go. So this is the start of the week. So 6-7, right? Immediately you get a price up at the end, then you fade it off. The fact that we're kind of just basing around the green level here is the market's ready to go. What does that mean? We've done enough of this digestive trade, this sloppy trade. After this large structure break, you can see that the R level was basically at the market. Again, an R5. We see that as an R5. Green level is at the directional. Means that the market can break in a big way, right? Breaks in a big way, and now our level starts to stair step it down, until we get this R level again at the mid. Now that it's at the mid, the market's done its time, it's put in its work, and it's ready to explode again, right? And where can it go? Either way, right? The fact that we based over it here, we came in, this is the New York Open, price down almost to the figure, boom, we held it, and where have we gone? We've exploded higher, right? So we get new data here in 4 hours. There's going to be a new daily, and there'll be a new R level, and that's how you can use the R level. So I always think it's super fun to talk about that, and when I see something that's great, I drop it in the Discord. Dan is saying, thanks for the stream. Always appreciate it. Not a problem. Always have fun hopping on. Let's take a look. Yes. Let me see if we support it. XMR. So actually, let me duplicate this chart, and then we'll see if we support it. We may or may not. We've actually downsized some of our symbols that we support, but especially some of the OG ones. But let's take a look. So we got to go up here, find a symbol, and then let's go to Binance, because if we're going to support it, it's probably going to be on Binance. This is Sierra Charts. So we have integrations with Sierra Charts. We are reloading our integration with NinjaTrader. So we do support traditional futures, equities, those kind of things. And then we are actively rolling out further integration. So we have a TradingView integration as well, which supports, TradingView has a pretty cool front end that back ends with a lot of brokers. So that is a good access point as well. All right, so let's look it up. It's going to be all the way down here. XMR. Let's take a look at the Perp. Did it load? Did not load. Oh, interesting. Yeah, it doesn't look like it popped up here. Let's see if we can reload it. Find symbol. Let's do, yeah, if Binance doesn't support it, then it most likely we won't support it any longer. A lot of our support is around Binance and on Deribit. So let's do the USDT. See if we can get it. Maybe, maybe not. But maybe. Huh. I don't think it's loading. Yeah, it's not loading any historical. Yeah, I'm seeing 220. Yeah, unfortunately, I don't think we're going to be able to take a look. I can take a look at our website. Let me do that real quick. I have some time. If we do PriceMap charts. All right, Dana, I have good news. We do support it. Okay, so here is the website. Cool. And let me zoom out here. Okay, let's take a look. So we also have it on our website. So we've actually rolled out a website version of all our analytics as well. And we've also, you'll see that this is involved, which is basically a market state, which kind of defines the state. So we can actually, we'll talk about that. This will be good. Okay, so specifically what we see, XMR, right? It's in a bear trend, right? And the best strategy for here is a sell R fade and a sell UP reversal, right? And so a sell R fade, you'll see that the R level is at the UP, right? You're not going to see it, but it will light up. The R is directly over the CR plus. So that's your optimal kind of risk capital deploying. And if this market wants to remain digestive, the expectation is 122.7 should fail, right? And that's on a daily. So let's pull up the weekly just to kind of, I mean, dailies are going to roll over in about 3 hours, 4 hours. So let's look at a longer time frame just so that it kind of sticks a bit more. But same thing here. So market's right at the directional. So 119 is your over under number. We've immediately priced back. If we can base over 119, where are we going to go? 130 is that next natural kind of take a stab higher, right? And because we're still in a downtrend, in a bear trend, the expectation is, again, two strategies to look for. So R fade, so 141, fade it, right? Or a quick price to 132.5 and a quick reversion right back down to like 128.5. That's what we see as a UP reversal. And optimal strategy for that is you basically sell it, risk up to 130.5, and then and take a stab and look for that 119 again. Oh. Yeah, I see that you posted that. It looks like our data is late. Interesting. Do you know if when did Binance take it or delist it? Did they delist it? Because if they delisted it, that's our data source. So we might not support it, but because you can see something like a BTC. Yeah, it looks like we might not support it, unfortunately, because the BTC is up to date. So interesting. Yeah, it looks like there's an issue with the API poll, because it should look like this, which is up to date. But yeah, so I don't know. If we don't support it, I can't really say much, but I could say what the expectation was in March for a week. So. But yeah, so that would be interesting to take a look at. I haven't heard XMR in quite some time. It was, I used to follow XMR, Dash, Stellar, EOS, all of those. I mean, even someone's waves that are, I mean, they're still around in some capacity, but they were front and center. Everybody was kind of talking about them in 2017, 2018. So those were fun. Ethereum Classic, those are fun. Yeah, it's been some time. Yeah, so Dan's saying it's still interesting to cover the strategy. Yeah, that's a cool part. So we just rolled it out. We're actually going to be updating it as well. So the options are going to get updated. We also have a score that we're rolling out as well, this is kind of a beta version, but it's going to be kind of like a tachometer, which essentially shows optimal place to deploy risk capital, which is a lot of cool tools that we're building on the website as well. just to help traders. So yeah, XMR, yeah. Interesting. Yeah, that's super fascinating. The ratios are always interesting. The XMR is Monero, right? I want to say. Yeah, Monero. Is Zcash? Zcash and Monero always used to trade like together. Kind of those correlation trades. I've been a little bit out of that world. We've been, for the most part, we're Bitcoin and Ethereum predominantly very active there. But oh, very interesting. Cool. Yeah, that's super fascinating. I mean, that's a blast from the past. So thanks for bringing it up. Nice. All right. Well, let's wrap it up. And if there's any questions, feel free to reach out. For those that are on the YouTube, kind of the recording, reach out here in the Discord. I am not super active on YouTube, but either reach out there, LinkedIn, Twitter, across the board. So, but I'll see you guys next week. Thanks for hopping on.